Hi, and welcome back to Hedge Fund Manager. As always, I'm Karl-Mikael Seeding. We have reached the CAGR and conclusions part of the deep dive into Atlas Copco, and we finished off by saying that you could actually use either revenues or EBITDA or earnings based multiples for valuing, for calculating a likely, a plausible and warranted value, future value for Atlas Copco. And that means we now have to first forecast the fundamental variable and then apply what we consider a stable and warranted multiple to that variable in the future. We're right now looking at annual revenues for Atlas Copco. They are currently at 177 billion euros for the last 12 months. Let's see if that's actually what it is. Highlights. So they are at 176.6 current last 12 months, which is just about the exact same level as they were in 2024. So for now, it seems as if maybe they have stalled out completely and are at zero growth. That does not bode well for this investment, but let's dig a little deeper. Well, the growth rate is about zero. What we can say about this this progression for Atlas Copco is that the growth rate is, well, it's both pretty cyclical, but actually tends to stay pretty close to 5 to 15% annual growth rates, sometimes slightly negative or just slightly positive. I think this big drawdown here of, well, even that is just only 15% fall. Sometimes when you're looking at historical numbers, you have to go back yourself to make sure that they haven't sold anything, divested anything that has been poorly taken, what we call it, poorly used in the numbers, poorly shown in the numbers. If you haven't actually adjusted the numbers for example, a big divestment or business sale, then the numbers might be less reliable. Anyway, using their actual sales numbers, we can calculate the average growth rate, even though it's a little bit unstable. An average growth rate for the last 7 years is 11% per year. So that is going from about 85 billion kroner here in 2017 to the current level, or actually 2024 level, of 177 billion kroner. And that comes to exactly, or more or less exactly, 11% per year nominal sales growth per year. And that is despite the COVID pandemic, the 2022 inflation problems, and including a positive boost from the semiconductor industry, where they are, well, Atlas Copco is making equipment for use in the clean rooms. Analysts, however, can show that by going to snapshots overview, and down here on the right you often see consensus numbers, which aren't always visible in other parts of Koifin, but here on the first overview, the snapshot page, you'll see that this is also this snapshot page in Koifin. It's actually pretty incredible. You've got everything here, including short interest, for example, which is a kind of an esoteric variable, but sometimes it could be interesting. You get all the multiples and as I've said, the analyst estimates down here. And as you can see, the sales growth forecasts from analysts It's a negative 4% for 2025. Yeah, it seems that that they are taking the risk of a recession to heart. They're taking it seriously. And then not really a strong rebound in 2026, just 8% revenue growth, so lower than their historic average. And 8%, it's slightly more than what you'd expect nominal GDP growth to be. And 8% is the level of profit growth that you would expect annually for 100 years from listed stocks. And if sales growth is 8% and EPS growth is, as you can see here, also 7.5%, so even a little bit lower than sales growth. These are at best market average numbers to be expected long term. So right now we're looking at a kind of an average growth company, and then actually consensus is even slightly worse for 2027. It seems that maybe Atlas Copco's recent growth spurt is hitting a little bit of a wall, or maybe it's simply that the analysts are overly pessimistic and don't really dare to take into account that Atlas Copco typically tends to find new avenues of growth and new ways of defending their high profit margins. Anyway, I think this time, rather than use the average growth rate starting from the most recent published numbers, I will actually use the consensus numbers for 2027. And I'll use the sales number because it's actually easier to forecast sales than profits. I'm simply then implicitly assuming that they will just keep their margins stable, or at least that their normalized margin level will be kept stable. Might even be more reasonable to assume a slight increase in their normalized profit level, but I'll go with this estimate for now. So for 2027, the consensus forecast was 195 billion kronor. I increased that by 11% for 2 more years to come at the 2029 estimate of 241 billion kronor in sales. On top of that, I apply the valuation level 4 times EV to sales. Remember that that historically they were between 3 and 5 EVs to sales last 12 months. So looking backward at what has been reported. So this is after you already have the 2029 numbers, you apply this one. And as you can see, we're now at 4.4. It's been at between 3 and 5 typically, except for very optimistic or negative periods, so fear or FOMO periods. But 4, I think, it's a good, reasonable estimate for what we can expect to at least have some time during that year in 2030, looking back at 2029 numbers. So applying a 4x, we get to 964 billion kronor in enterprise value. Luckily, enterprise value and market cap is just about the same for Atlas Copco. They don't have much cash or debt or net debt. It's really minuscule, just like 10 billion or so in net debt. So using these numbers, we get to an EV progression of 5.8% per year, or market cap. Dividends are about 2.1%. You can see that in this overview chart for Atlas Copco. It's usually down here, but in the overall screen. So that comes to a total return of 8% per year. And the risk level for Atlas Copco, I mean, that's typically just, Atlas Copco is the Swedish market. So just getting 8% returns per year for market level of risk, I mean, you should expect at least 50% more.